FedNow. So the question is, what is money and what does it mean?
The acclaimed author of Rich Dad, Poor Dad, Kiyosaki, has issued a notable warning about the Federal Reserve's new service, FedNow, underscoring the risks of keeping substantial cash in banks amidst uncertain economic times. We will explore the layers of his warning, its implications, and what it means for the future of personal finance. It's important to understand what FedNow is. This service is designed as a real-time payment system, enabling immediate and around-the-clock processing of electronic funds transfers. This capability stands in stark contrast to traditional banking systems where transactions, especially during non-business hours or holidays, can experience delays. FedNow's promise is one of expediency and constant availability, a significant leap forward from the current day-end processing model used by most banks. This initiative is part of a broader movement towards enhancing the efficiency and speed of financial transactions. With the advent of digital technology and the increasing demand for instantaneous financial interactions, FedNow aims to address these needs by providing a platform that supports immediate fund transfers both for personal and business use. It's envisioned to facilitate everything from payroll to peer-to-peer payments, and from bill payments to business transactions, all in real time. However, Robert Kiyosaki's perspective on FedNow brings a critical angle to our discussion. Kiyosaki, known for his insights on financial independence and his critique of traditional financial systems, raises concerns about the potential impacts of FedNow on personal financial security. His apprehensions are rooted in the risks associated with digital financial transactions, including privacy issues, the potential for increased surveillance, and the broader implications of moving towards a predominantly cashless society. Kiyosaki's critique is not just about the technical aspects of FedNow, but encompasses a broader discussion about the nature of banking and financial autonomy in the digital age. He questions the implications of such a system on individual control over personal finances, highlighting the need for caution and a deeper understanding of the potential risks involved.
First, let's understand the technical mechanics of FedNow. At its core, FedNow is designed to provide instant payment services. Unlike traditional banking transactions that can take days to clear, FedNow enables immediate transfer of funds 24/7, including weekends and holidays. This is achieved through an innovative processing system that bypasses the usual waiting periods associated with banking operations. The implications of such a system are vast. For individuals, it means quicker access to funds, enabling immediate payment for services and goods, and faster resolution of financial obligations. For businesses, this translates into enhanced cash flow management, reducing the lag time in receivables and payables, and thereby improving overall financial efficiency. However, with great innovation comes potential challenges. One of the primary concerns surrounding FedNow is the issue of security. The instantaneous nature of transactions reduces the window for detecting and preventing fraudulent activities. The Federal Reserve has been working on robust security measures, but the effectiveness of these measures will only be known once the system is fully operational. Another aspect worth considering is the impact on traditional banking practices. FedNow could potentially disrupt the way banks have been operating, especially concerning revenue models based on transaction fees and float income. The shift to instant payments may force banks to rethink their strategies and adapt to a rapidly changing financial landscape. Furthermore, FedNow's introduction is set against the backdrop of an increasing shift towards digital finance. It aligns with global trends in financial technology, where the emphasis is on speed, convenience, and accessibility. However, this shift also raises questions about financial inclusivity and the digital divide. How will FedNow affect those with limited access to digital banking services? Will it widen the gap between the financially literate and those who are not? Kiyosaki's primary concern with FedNow revolves around the themes of financial privacy and autonomy. He argues that the move towards instant digital transactions, while convenient, potentially opens doors to increased financial surveillance and oversight. With transactions being processed in real time, there's a possibility of heightened monitoring by financial institutions and perhaps even governmental bodies. This, Kiyosaki fears, could lead to a scenario where individual financial liberty is compromised as every transaction is tracked and scrutinized. Another aspect of Kiyosaki's critique of FedNow is the risk of centralized control over finances. The digital nature of FedNow, which facilitates immediate transactions, also means that financial operations are increasingly reliant on digital infrastructures controlled by a handful of entities. Kiyosaki warns of the potential risks associated with this centralization, particularly in scenarios where system failures or cyber attacks could disrupt access to funds. Moreover, Kiyosaki emphasizes the importance of diversifying one's financial portfolio. In a landscape dominated by digital transactions, he suggests that relying solely on traditional banking could be risky. He advocates for exploring alternative assets such as real estate, precious metals, and even cryptocurrencies, which can offer a hedge against the vulnerabilities of digital financial systems. In light of the insights shared about FedNow and Robert Kiyosaki's viewpoints, it's crucial for viewers to consider how they can adapt and protect their financial well-being in this evolving landscape. Here are some actionable strategies. Increase financial literacy. Understanding the basics of the financial system, including new technologies like FedNow, is essential. Stay informed about the latest developments in banking and finance. This knowledge empowers you to make informed decisions about managing your money. Diversify financial assets. As Kiyosaki suggests, don't rely solely on traditional banking. Explore diversifying your portfolio by including assets like real estate, precious metals, and even cryptocurrencies. Diversification can reduce the risk of financial loss in case of any single system's failure or economic downturn. Embrace digital finance with caution. While embracing the conveniences of digital banking, exercise caution. Be aware of the security and privacy aspects of digital transactions. Use secure internet connections, avoid sharing sensitive financial information, and stay updated on ways to protect your online financial activities. Emergency fund. In a world of instantaneous transactions, having an emergency fund becomes even more crucial. Ensure you have accessible funds that are not tied up in digital platforms, which can be crucial in case of technical failures or cyber attacks. Advocate for financial privacy and security. As consumers and citizens, voice your concerns about financial privacy and security. Support policies and initiatives that protect individual financial rights and promote transparency in the banking sector. Stay adaptive and flexible. The financial world is dynamic, and it's important to stay adaptable. Be open to learning and adjusting your financial strategies as new information and technologies emerge. By taking these steps, viewers can better navigate the changing financial landscape, safeguarding their assets while taking advantage of new opportunities that services like FedNow offer. As we conclude this session, it's evident that while FedNow introduces new efficiencies in banking, it also raises important questions about financial privacy and security. Kiyosaki's cautionary advice serves as a crucial reminder of the need for vigilance and proactive financial management in today's evolving economic landscape. Thank you for joining us in this detailed exploration, and we encourage you to stay engaged with these critical financial issues.